Hello guys, welcome to my YouTube channel. As you all know, the goal of this channel is to expose the forex markets and wealth and simplify what I've learned for the past 7 years. The reason why you've clicked on this video is because you feel there's something still lacking in your trading strategy or system. It's not a coincidence at all, because you know what? I have that secret we've been looking for so many years. And trust you me, I know for sure that trading is the most difficult career ever. But I also know, and I have also touched the rewards of it, and it's the most rewarding business ever. This is the last YouTube channel you'll ever visit seeking answers about forex trading. And guess what? I'm going to give you only the things that you need to become a professional forex trader. I have seen the most of it, if not all. I know for sure what works and what doesn't. And that's the purpose of this YouTube channel, to hit the nail on the head. The forex industry is very enormous. It's a huge library of things. There is a lot of distractions, a lot of myths and misconceptions about it. There is really a lot that could easily intimidate the new starter. And as long as you hear me speak about these things, I know you'll continue learning something. I know, just know that it's not my intention to keep you bogged down on a continuous study, but just know I'm just going to give you what you need in this forex industry. First of all, you need to sit down. Number one, come up with a mission statement. Why would you even want to look at me or anyone else? Why would you want to study? What brought you here to me? There's a lot of things that people can say about me as a person, and that's a person's flaw, yet I am a human just like the rest of you. But my content is me trying to simplify everything that I've learned in the industry. Trust you me, there's a lot of distraction out there. There's a lot of people selling courses and signals, yet they aren't even traders themselves. That's why trading is associated with a lot of scammers. There's a lot of misinformation about what works and what doesn't. I have spent a lot of money buying courses. I myself have bought signals. And let me tell you for sure that some will work only for a certain period of time, some won't work at all. And that's just the nature of this business. There is a lot of noise. People are selling out their lifestyles instead of selling the real gist of this career. And that's why I even decided that I won't be selling courses anymore, or even signals, and I'm going to share with you everything. I mean everything that I've learned over the past few years. I'm going to show you what works, what doesn't, and help you see the markets in a very, very different way. There's a lot into these markets. There's really, really a lot. And as long as you have the heart to study and learn, well, there's no limits to how much you can achieve. And just want to tell you guys that this industry is not for the weak. It's really, really not for the weak. And before you even begin studying my content, before you even post my step-by-step courses, I would really want you guys to reflect if this is something that you can picture yourself doing for the next 10 years or even 20 years, because these markets are very, very, very venomous. Once it gets into you, it's really, really difficult for you to stop trading, and it can take as much as forever just trying to learn the markets without any profitability. That's why I'm telling you guys, focus on the content, forget about the lifestyle, the noise, and money will come in secondary. If you focus on the money, it will evade you. Just focus on learning this craft, and after that, there is no limits to how much you can make. Today, I'm going to be showing you how to use the Fibonacci retracement tool. The Fibonacci retracement tool is a technical analysis tool that can be used to identify potential support and resistance levels. It is based on the Fibonacci sequence that came up with a smart mathematician named Leonardo Fibonacci, with a sequence that proved that everything in the universe repeats itself in a specific mathematical manner. From the petals on a flower to the spiral patterns on snails, all fulfilled with specific numerical sequence. The same Fibonacci sequence applies in everything and anywhere, including trading. A retracement begins as buyers will come and take their profits and leave. New buyers come in at specific levels using Fibonacci retracement. Please follow what I'm going to show you and practice it enough so that you can master the institutional order flow and also the price delivery algorithm. The Fibonacci as well, it is based on the Fibonacci sequence, which is a series of numbers where each number is equal to the sum of the two previous numbers. For example, 1 plus 2 is equals to 3. And that's what makes Fibonacci really different. It's a really golden tool that can be used to identify potential premium or discount levels. It can be used also to measure your take profit points, and I'm going to show you exactly how we are going to use it. So this video will be divided into two, or rather 3 sections. The first section, I'm going to give you the rules of how to draw the Fibonacci retracement tool. The second section, I'm going to show you how to change the settings of the Fibonacci so that it can favor the Forex algorithm. Number 3, I'm going to show you how to use it. Plus, I'm also going to give you a strategy out of it. So let's get into it. Okay, rule number 1, always draw from left to right. Rule number 2, always start and draw in the direction of the trend. Rule number 3, the end point is the high of an uptrend or the low of a downtrend. Rule number 4, the starting point is where momentum begins that breaks a new trend high or low. Rule number 5, this is universal and works on any time frame and any instrument. So this is something that will never stop working, and that's why Fibonacci is one of the best, if not the best tool to use in trading. Fibonacci is not an indicator. Fibonacci is not an indicator. It is a tool. It is the best tool you can ever incorporate into your trading strategy. So let me show you how to draw practically. Okay, I'm going to go to insert and then objects and then Fibonacci retracement. Draw it from the beginning of the move. This is an uptrend you are following, so we are going to go to the lowest point the move began, up. Now I'm going to draw, and this is where most traders get it wrong. I'm going to draw it from the beginning of the move, the lowest. There are some traders who draw it from the closing of the candles. Some are going to draw from the beginning of these candles close, and then others are going to draw it from this week. But with this strategy of mine, this golden rule is something that you cannot assume, because even if you were to go and try out drawing this Fibonacci from these candles close, remember in lower time frames it's going to show some candles here. So what you're doing, you're not even using Fibonacci in the most efficient way, because you're trying to assume the candles that are formed here in lower time frames. Then what are you doing? Like, it doesn't make sense at all. So the Fibonacci is to measure the range from the beginning of the move until the point where a swing is broken. So you don't stop at this level. You don't stop at this level until a swing. And what do I mean by a swing? A turning point. A turning point. A swing. A swing has to be broken in order for you to draw a Fibonacci. So this is our swing here. So price comes, it comes, consolidates, and finally breaks this swing. As you can see here with the trend line, it breaks it. So I'm going to draw from the lowest point here up to the highest point. Include the wicks. Include the wicks. Don't assume the wicks, because it is part of that range of the move, and it will count when your entries are going to be made, so that it can reduce the extent of the measure of your stop loss range. So for in this case, after drawing from left to right, and also make sure it's from the lowest to the highest point after breaking a swing. Also make sure that what else am I forgetting? Also make sure that it is drawn in the direction of the trend. Yeah, as you can see, price is going to the right side and to the upwards. So left to right, and then price is going from down to up, and then price must also break this swing in order for the Fibonacci to be drawn, and also in order for the Fibonacci to work at its highest efficiency rate. So how do we draw the Fibonacci in a bearish situation? This was in a bullish situation. I'm going to come on entries and everything. We are still in the first section. This section, I'm just going to show you how to draw the Fibonacci and the rules. So I'm going to go to insert again, insert objects, Fibonacci Fibonacci retracement. And in a bearish situation, I'm going to draw from, let me just use a point where price has already done its thing. For example, here I'm going to draw it from this point, from the highest to the lowest in the direction of the trend. Let me just include the full screen so that you guys can see it clearly. I'm going to draw it from the highest to the lowest, and just a minute. Yeah, from the highest to the lowest, highest to the lowest, followed by, it should be moving in the direction of the trend from left to right. Also, the end point should be the lowest point in a bearish situation, and the highest point on top of that. Basically, that's how you draw the Fibonacci. Well, going to the next section, I'm going to show you how to change the settings of the Fibonacci so that it might work on your favor. So it will work. It's not even a might. It will work. Just going to right click the Fibonacci, this dotted line, then you're going to go to the levels. Now the settings that I'm going to give you are the settings that you should use. Always assume the settings that the Fibonacci comes with. Use the settings that I'm giving you right now. And so our first level will be 0, this level, so we are not going to change that. We are not going to use this level 6.1, so I'm going to change it into the level that we're going to use, and that will be 70.5. I know most of you are going to say, okay, this guy is just using ICT stuff. Hold up, just hold your horses a little bit. So I'm going to show you something that nobody, even ICT, has never shown you. 0.705. Then I'm not going to use the level 38.2. So I'm going to put my own level, 79.1, 0.791. I'm going to use 50, so I'm going to leave it that way. I'm not going to use 61.8. I'm going to edit it to 62. I am going to use the 100% level, so I'm going to leave it that way. Then I'm going to just add maybe 2 Fibonacci extensions, and first one will be around negative 0.27. So come here, tips 0.27. here you're going to put negative 62, sorry, negative 62. Then here going to put negative 0.62, and lastly maybe I'm going to put a symmetrical price swing, which is going to be negative 1, and I think it should remain negative 1 or negative 0.1. Let me try it out. 0.01. Just see. Something. Just edit. Again, as you can see, there is something right here. I think it should remain as negative 1. Negative 1. Yeah, got it right. So, that's how you change the settings of the Fibonacci to favor the algorithm. Well, this is how you use it, okay? This is now how you use it. Well, if you are in a downtrend, as you can see, we are in a downtrend, okay? I am going to draw it from the highest point. As you can see, the 100 should be at the beginning of the move. Just so you know, before I forget that, the 100 level should always be at the beginning of the move, and the 0 level should be at the end of the move. Okay, that add it to your notes. Add that to your notes. The 100 level should be at the beginning of the move, and the 0 level should be at the end of the move. As you can see here, price came, as I told you earlier, price should be able to break market structure first of all before drawing the Fibonacci. It should be able to break a swing, and this is the swing here. As you can see, I'm swinging over here, and the swing comprises of 1 or 2 candles. Okay, 1 or 2 candles. Most of the times it can go up to 6 candles, but it should be able to represent a swing structure, a hollow, as you can see. So price breaks this structure, it breaks it. Immediately you see this candle close below this swing. Wicks don't lie. As long as it closes below this swing, wait for price to retrace. So immediately it closes, I'm going to draw it from the highest to the lowest, and I'm going to wait for it to reach at least to the level 50%. As you can see, it comes up, doesn't hit our level, goes down again. I'm going to extend this Fibonacci again to the lowest point, just waiting for it to come back to at least the 50% level. Remember, my entries should and only can be done at the 50, 62, 70.5 and 79.1 level. This is because this is the only way you can do it, because at the 50% level it gives you a risk reward ratio of 2 to 1. Even if it hits your stop loss, well, your next trade you can recover it, because the difference between here and here and here to here is the same, is equal. So this gives you a good risk reward management plan, and also helps you to enter at the most optimal point. Of course, the most optimal point is the 70.5. This is where you should be entering most of the time, but most of the times, or rather not always, will it always come to 7.5. I personally start entering here at 50.5, at 50.0, sorry, based on the market structure as well. As for in this case, price comes, hits this level, you can as well see this gap over here. This should be another factor that you should consider while entering the markets. You can combine this with the 50% Fibonacci level. This is a gap. The difference between these 2 weeks, this week here, focus on the pointer, and this week over here, this week and this week. So the difference between them should be giving you your entries as well. This is also a gap. But as well, remember what I taught you the other day. If you're new to this channel, you can go and check my previous video about that. I'll be dropping that, a better version of that video very soon. But basically it was talking about the breaker blocks. The last down candle in this case clears the highs, then comes back down. Price will always find it difficult to come again above this breaker block here. So in this case, I will rather enter the 50%, put my stop loss at the 100% level, and wait. Put my take profit 1 at the 0% level, and put my take profit 2 at the negative 27% level. As you can see, price comes into my golden area, my golden zone within these key Fibonacci levels. I enter a sell over here, put my take profit here, put my stop loss here, and wait for the markets to do its thing. When it hits this level, as you can see, it hits this level, I'm going to remove when it hits this level, I'm going to remove my partials. Maybe if I staked $10, I'm going to remove the profit that $5 has made me, and leave the rest of the $5 to hit the take profit point 2, which would be at negative 27. So in this case, my take profit 1, if I was to enter the 50, my take profit 1 up to the 0 point level, it's going to be about 165 points, and then my next profit point, it's going to bring about 254 points. Okay, well, this is in a bearish situation. Now let me show you how you can trade a bullish situation. As you can see, this is something really easy to use. So I'm just not going to delete it, but so that the settings may not go out, but let me just show you. So in a bullish situation, you're going to draw your Fibonacci from the lowest point to the highest point after a break of a swing. I told you the maximum number of candles that can be in a swing are 6. 1, 2, 3, 4, 5, 6. As you can see, there are 6 candles. It is a swing. Price broke this structure over here. It came and broke this structure, and immediately it breaks this structure. I am going to draw my Fibonacci from the beginning over here, the lowest point to the highest point after breaking the swing high in a bullish situation. And as you can see over here, price came back. As I told you, you now wait for price to come either up to 50, 62, 7.5 or 79.1 level, depending on other factors that might cause you to wait for price to come back to 70.5, which I'll be dropping in the later videos. But you can use the strategy I gave you last time in the previous video. I showed you a simple strategy about a breaker block, just as I have shown you how to use the breaker block here, coming down, up, clears the highs, come back down again, expands down, comes back to the mean threshold as I explained earlier in my previous video, comes back to the main threshold over here, hits the limit order or gives you the entry signal, and then you sell. Likewise over here you can just use the same principle combined with the Fibonacci, the last up move before a clear to the downside, or rather you can use this. In fact, you can use that one. Let me just eliminate the Fibonacci from the view. Now this is where the rubber meets the road. If you are a keen person, this goes deeper. This is where the rubber meets the road. Okay? Just to get deeper to what I taught you last time in my previous video, you can just go and check it out about breaker blocks. I told you in a bullish situation, the last up move, see breaker blocks as a move, don't see them in terms of candles. Likewise, see Fibonacci as a whole move, as a whole range. You know, it's all about the data that this price carries. It's about the data, representation of data that it carries. So we're not talking about specific candles or specific patterns. No. We are talking about the complete range, the move. And I told you in my previous video that a bullish breaker block, it's the last move to the upside before a sweep to the lows and then an expansion to the upside. Just look at the accuracy of this the last up move. The last up move. Just a little bit. Just going to edit it over here. The last up move. You see this last up move? If I was to use a smaller time frame, you could see it more clearly. But you can see it. Just normalize seeing them in any time frames, because you are looking at the move, you're not looking at the candles. Which is the last move to the upside before I clear to this, before I clear in this liquidity. The last move is this one, up, and then I clear to that. So the main threshold of the last up move over here, guys, this is where the rubber meets the road. The last up move, the main threshold. Okay, it's there. This is why many ICT students continue crying, because ICT gave them something and they just don't know how to implement it. Well, you can use this together with the Fibonacci to get your most accurate levels. As I told you earlier, the most optimal entry point is the 70.5. So round this main threshold to your nearest Fibonacci level. It's going to be 70.5 to your nearest Fibonacci level. Now look at how, just look at how accurate this is. By just using what I've taught you in 2 simple videos, you're like 10 years ahead of even the most profitable traders in terms of knowledge. You're like 2 years ahead of every trader out there trying to look for the secret strategy. You are 10 years ahead, 20 years ahead, 30 years ahead of that guy who is still trying to crack the ICT course. I am giving you straight away, point blank, I am hitting the nail on the head. This on its own, Fibonacci and the breaker blocks that I'm showing you can make you a lot of money. Just look at this. You entered at this point. Okay? Now, where is your exit? Your first take profit point should always be at the 0 level, and maybe your take profit point 2 can continue at the negative 27, but I always like to get out at the optimal exit is 0. The optimal entry point is 70.5 and the optimal exit is 0. So from here up to there, 238 points within 1 day, and it doesn't even takes you much time to be in profits. Hits this level, goes into deep profit straight away. Fam, there is nothing much greater than this. Nothing comes close to this. There is nothing, I can assure you guys. This is what I use. This is the strategy that I use on a day-to-day basis. Of course, I've got much a lot from where this came, and I'm going to be sharing with you with time. There is much more from where this came from, and so I can't say much. Well, I hope you've enjoyed this video. Just look at that. Wow. There is even a setup coming up, as you can see over here. Let us just use the Fibonacci quickly, as I told you. From the beginning here, the 0 should be at the beginning of the move, up to the lowest point. Let me just adjust it carefully. Up to the lowest, comes back to the main threshold of the breaker block, down before a clear, down move before a clear sweep to the highs, main threshold, round it off to the nearest Fibonacci level, 70.5. Just look at how accurate that is, and it's already starting to go down. Fam, I can't say anything more than this. As you have seen, the Fibonacci retracement tool is a powerful tool, and it can be used to identify potential support and resistance levels. And it's also a simple tool to use. It is the most user-friendly tool that you can ever find in Forex, that accommodates risk management and trading psychology and the strategy itself. It's very simple to use, and it's the best strategy for beginners and also for advanced traders. I still use Fibonacci, and you can combine it just as I have shown you with the price action to do the extensions. You can even reverse the Fibonacci. You can use it in a reverse way to know the extent of a higher time frame pullback. Likewise, you can do the same with the price. It's something that hasn't been explored that much, and I would really encourage you guys to try and explore it further. Just go and test it, go and try it out and get naughty with it. Just don't follow the rules that have been placed there already. Don't follow the settings. Try and tweak the settings, see what works, see what doesn't, and that's how you come up with, different systems. You can do this by applying it to charts of different currencies, different time frames, because one thing for a fact is Fibonacci is part of price action. Fibonacci is part of price action. Why is that? Because it is based on repetitive human behavior. This is something that happens again and again. This is something that will never stop working because it is based on repetitive human behavior. As the algo changes or whatever it happens, the Fibonacci will help you know if the algo has changed. And the Fibonacci also accommodates the changes in the algo because it is part of price action. So even the algo changes, even as the algo changes, the price itself reveals itself as the algo changes. And if the price changes with the algo, so will the Fibonacci settings as well show you that the algo has changed. But the worst it can do to you is maybe scare you a little bit because you already know your take profit points and your stop loss where they are going to be. So the algo can only scare you to a certain extent. It can play around your stop loss, but as long as your stop loss is not hit while you're still in that trade, as long as your stop loss is not hit, the trade is still valid. So I encourage you guys, you can practice this, you can incorporate it to your trading plan. And if you have any questions, feel free to do so. Leave a comment below, and I will do my best to answer it. If you feel this video is of value, please hit the like button, hit the notification bell so that you may be alerted when I drop a video like this. And also, don't forget to subscribe, guys. Thank you.